Andrew says, hey guys, I'm 28. I make $150,000 a year as a lawyer with the potential to rapidly increase that over the next couple of years. I decided to move back in with my parents after law school because I wanted to do some big catching up after making pretty much no money in my early 20s, and it's been about 2 years now that I've been living with them. My question is about purchasing a home or a condo in the current market. I currently have $130,000 invested between my Roth 401k, my Roth IRA, my bridge account, as well as $40,000 sitting in cash in a money market account. So what I'm hearing, Robert, just make sure, so 40K in this money market and then 90K invested in these retirement accounts, it sounds like. Andrew says, I have absolutely no debt, very low current living expenses because I'm at home, but with interest rates so high with mortgages, I'm struggling to decide whether it makes more sense to buy something that I can live in for a few years and then keep as a possible rental, or just continue to rent for the time being and deploy that extra cash into my investments if I start to see some big dips in the markets. I live in a very high cost of living area, so my fear is I might be locking myself into a high mortgage payment that will preclude me from investing and limit potential cash flow if I decide to rent it at some point. Wow, this is definitely written by a lawyer. It sounds like it for sure. So I'll let you kick this one off, Robert.
This is going to be a lot to unpack, but I love this question. So let's start with, should you buy now or should you wait? I don't think there's ever a bad time to buy real estate. I don't think I would buy a single family home right now. I think you should really look at house hacking, because then maybe you can find a situation where your payment is zero out of your pocket if you buy that duplex, triplex, or quadplex. Because if you were to do that and use one of these Fannie Mae 5% down mortgages, you could really put yourself in a great position where you'd have the upside potential with the capital appreciation, you would have some tax benefits, but also finding good payments could equate to either 50, 60, 70, or maybe 80% of the payment being made by the tenants. And that gives you this property and this great opportunity without coming out of pocket much. It's a tough situation, but I think you should go for it if you're willing to house hack. Now, if you want to buy a single family home, something we covered with Brandon Turner last week that's very popular, you could look at buying a 4 or 5 bedroom home in an area that's going to have good capital appreciation and maybe rent out 1, 2, or 3 bedrooms to some tenants that you would pre-screen, make sure that they're compatible, and then that way you could have some income there as well. So I love your situation, and you're definitely on the right track of what to do, and you have a lot of options. So just carefully weigh which one works best for you. Or if you live in a high cost of living area, go 15 minutes away to an area that's starting to gentrify, but doesn't have the same cost of living of where you're at. And then just have a little further commute for your job, but be able to get into something at a more reasonable rate.
I love that breakdown, Robert. And let's put some numbers behind this. So you're making, I think you said, $150,000 a year as a lawyer. You're obviously investing aggressively toward your Roth 401k. So let's just say your effective tax rate after taxes, insurance, and contributions, all that fun stuff, is like 25%. So let's say you're taking home on average about $9,000, maybe $10,000 per month after taxes and everything gets figured out. So to Robert's point about house hacking, let's say you found a duplex in the $600,000 to $650,000 range. You put about 5% down, so let's call it $30,000 to $35,000 at an interest rate of about 7%. Assuming you've got a decent credit score, which I would imagine you do, you would probably be able to get that interest rate. Now, assuming we set aside some property taxes, some homeowners insurance, and some PMI every month, you're looking at about $5,000, maybe $5,200 a month total for this mortgage. If you're able to live in half of it and rent the other half out for $2,000, maybe $3,000 a month, depending on how cost of a living area you actually live in, we're talking about a $2,000 to $3,000 a month mortgage for yourself, right? After that person participates helping you pay your monthly payment. Now, I guess, you're very analytical, you're a lawyer, so you can kind of run the numbers. Well, what would that be if I got an apartment? How are apartments priced where you are right now? Are they around the $2,000, $3,000 a month range anyway? Because if they are, then maybe this duplex idea would allow you to have a similar monthly payment for your living expenses, not cause you to go house broke, assuming you can find a tenant pretty easily, and then also allow you to build equity inside of this piece of real estate that, let's call it, in 2 or 3 years' time, when you're ready to either move up in your career, maybe you want to move somewhere else around the country, you got an opportunity to go make a bunch more in a place like Chicago or Nashville or Atlanta or something else, that might allow you to now rent both sides of the duplex out. Maybe you're cash flowing a little bit more. Perhaps you can refinance it at a lower rate. There's a bunch of different ways that this comes together for equity appreciation, a decent chunk of this being paid by a tenant every single month, and a little bit of flexibility where if you do want to move, you kind of have an out, which is someone else can just, live where you were living.
Yeah, I think it's a great breakdown. And just, there's a lot of options when you have high income and you're really learning what your financial options are. And I think this is a good one. And it could go either way. I like the renting side and dumping as much money as possible into the markets and not trying to time the markets. But I also like owning property. I try to buy properties all the time. And so either way works, and they're both good strategies for the future.
I think the most important thing to just realize here, Andrew, is that you've done a wonderful job, an absolute wonderful job financially by 28 years old. You're making $150,000, $200,000, $250,000 a year likely over the next couple of years here. You have zero debt. You've been living at home. You've been investing aggressively. Like, you've done all the right things to give yourself the flexibility to make a choice that makes the most sense for you. I know you're trying to figure out the perfect choice, but sometimes the perfect choice doesn't exist. Yep. Sometimes you just have to jump into the water and start swimming. And maybe that could be with real estate. Maybe that means you're still living at home, your apartment. Like, it doesn't matter. It doesn't matter the choice you make, like what Robert said, because you're the type of person that's going to make it work regardless.
Remember, everyone listening, and I love these episodes, personal finance is personal. Life gets in the way. You fall in love. Something happens with your family. You relocate. Life gets in the way. And all you can do is your best. So as long as you're learning and you're advancing and you're executing on the things we talk about and the things we educate on, you will be just fine, because everybody's path to freedom is different.
One of the best pieces of advice I ever got when I was super down about losing some money in the stock market or losing some money on a business venture, whatever, this person said, "Austin, you have the rest of your life to make money." Right. And so I took that and I apply it to all parts of my life, where if my dad, for example, who's turning 80 this year, if he wants to go on a 2-week vacation with me, I'm going to go hang out with my dad. Right. Because I might not have that opportunity in the future. I can always, make more money in the future to offset that 2 weeks of vacation. It's just, I want people to really hammer home what you just said. Personal finance is personal. You can always make money for the rest of your life. Do the things that matter most today with the people that you love. That's what money affords you, the flexibility and the opportunity to make these choices.
I love that response. Wow.